Guys, welcome to Money Chats. Excited to have y'all here today. Man, so we're going to be talking about construct of money, Bitcoin, Ethereum, the history of money, how it all relates, the macro, the micro. I've got two guys that are with me today. I've got Brad and Sean. I'm going to be bringing them on in just a second. But sit back, relax, watch this intro. We'll get rolling. Oh, y'all got me jamming. All right, let me bring these boys on. Let's see. Brad, what is happening?
Hey, guys.
Sean, what's up, dudes? How y'all doing?
What's up? Fantastic. Doing great, man. Happy to be here to talk about this subject.
I figured if we had three people, it would be more chances of some crazy conversation, maybe some, I don't know, agreements, some disagreements, talking about what's happening in the world of crypto. And then, so the last time I was interviewing with Sean, we were chatting, having a conversation. Brad, you hopped in on the chat, and you're like, "Man, I would love to jump in this. I have like this macro view of money and the whole idea." And so we were like, "Well, let's set up all three of us to chat." So here we are.
Yeah, man, right on.
So why don't y'all, you don't necessarily have to tell your whole story per se, but maybe just give like a quick overview of kind of what you've got going on and what your views are in the sense of like the money system or in crypto, or just kind of what your like quick thoughts are, just so people kind of have an understanding of like where you guys are coming from on that.
Yeah, I'll just go first. So I'm Brad Long. I run a website called zerodebtcoach.com, and I specialize in helping people, basically manage their money better, get out of debt, hopefully escape their corporate nightmare if that's what they're trying to do. And one of the things that we talk a lot about in that process are investments, and specifically about cryptocurrencies. So one of the things that I do is I take more of a macro view about cryptocurrencies as more of a mid to long-term investment strategy. And because it's such a new asset class for so many people, just really educating them on what it is that they need to know and how they need to be able to understand it in order to explain it to a 5-year-old so that they feel comfortable starting to allocate some of their assets into it.
Totally. Okay. And so let me ask this real quick too. How does that relate to in the world of crypto and like what we're kind of specifically going to talk about? What like how much does that relate? Like what percentage does that kind of relate into that conversation, do you think?
I'm not sure I understand the question.
So I guess like in the financial world or whatever, I guess like for me, man, like, so what I'm trying to think of is, okay, what percentage of me and like personal finance should I be like looking at crypto in the sense of personal finance, of expanding what I'm doing? And like, does that make better sense or no? Am I still?
I think so. So I think that part of what, I sort of had my second financial awakening in the 2007, 2008 financial crisis. I had already gotten completely out of debt, by 2007. And so when that crisis happened, it really awakened to me to macroeconomics. I saw what the Federal Reserve was doing. I saw what the government was doing in terms of, just printing money. And so it really kind of led me down the rabbit trail of understanding, monetary policy and fiat currencies, US dollar, the euro, all currencies are fiat currencies, or, are given value by the governments that create them. And I've seen, just the debasement of these currencies over the past decade, especially hyper debasement over the past year and a half since, what happened in 2020. And so the tack that I kind of take it is that this is an ecosystem, and I'm sure Sean can pipe in about this as well. It's an ecosystem or an asset class that is emerging. Bitcoin, for example, which is really kind of the archetype for all cryptocurrencies, was really born out of the 2007, 2008 financial crisis, because of what was happening with the debasement of these currencies. So what happens is, as more money is printed, every single unit of that currency is devalued. And when you compare it against, an arguably harder asset like Bitcoin, there are only 21 million that will ever be created. It's going to absorb a lot of that inflation. And so it's my, strong, passionate conviction with my student base, with our, with our entire student base, that you really need to start understanding this as an asset class. One, because it is really the future of money, and two, because in a more immediate sense, to help shield yourself from this incredible inflation that is really just starting.
Does it bother either of you guys that we call it crypto?
No.
Nope.
It bothers the mess out of me, man.
Really?
Yeah. Well, it's funny. So I just I thought I was the only one. I thought I was alone, and so I just listened to a podcast with Brian Armstrong, so the CEO of Coinbase.
Oh, okay.
Coinbase. So help start that company. At the tail end, it was with Guy Raz, How I Built This, which is a podcast I love. At the tail end of the podcast, Guy Raz asked that. He was like, "Man, is it weird that it's crypto?" And it made me feel better, because Brian Armstrong was like, "Yeah," he's like, "It's kind of weird, but he's like, the memes took over, and it's that crypto is what it is." He's like, "We probably should have called it just digital money or whatever," but he's like, crypto it is. And so I don't know. It's just, for me, I think it's all psychological. It's just like crypto is just like weird word to me. So I'm glad that it doesn't bother you guys, because that's what we need. We need people that the name of it doesn't bother them at all.
Yeah. I guess I've just heard it for so long. I don't even think twice about it anymore.
But to me, think about the new people coming in that are just hearing about it. It sounds kind of dodgy. Like if you can, it's hard because you guys are in it. You're all in it. But if you're like the outsiders, the
Crips and the Bloods,
something like that, or like crypto, man. Like, I don't know. It just sounds strange.
I mean, the Staples Center is now sponsored by Crypto.com.
I saw that. I'll try to pull up that article. So crazy, Brad. So it's Sean, what is it? I think it's like a $700 million deal for up to 20 years or something. Yeah, to rename the stadium. I'm like, okay, man, these guys are making big moves to try to make this mainstream, right? Pretty nutso.
Mm-hmm.
All right, Sean. So maybe give your kind of viewpoint on. I know my first question was super vague and in general. You can answer it however you want, but just kind of what your angle is on finances and money and how crypto ties into that.
Yeah. So I'm Sean with Invest with Fire, and I help people make money with crypto. And I focus on technical analysis and research. And I mean, the whole crypto is the future. We'll see if this is like a tech.com bubble, but we'll find out. There's definitely a lot of innovations. But what's really interesting to me is that I feel like we're witnessing the transition to Web 3.0.
Mm-hmm.
And if you guys aren't familiar with that concept, so you can think of it as like Web 1.0, right? Where you just kind of had a website, right? And you go visit the website and you do check out the articles there, right? Web 2.0 is all about it's Facebook, Google, right? These huge companies collecting data, right? And you're the product, right?
Mm-hmm.
Nothing's free, right? And they're collecting all this data and storing it and using it, right? Now, this transition to Web 3.0 is where it has the tables have turned now, where people can actually create value on the internet. So NFTs, right? NFTs is where people can sell JPEGs that are unique, right? And you're actually creating value off that. So it's this interesting transition where people are no longer the product and people are now producing value and can now store value on the internet. If you pull up that article that I have, if you scroll to the top of the article,
okay,
there's a nice little diagram of what I'm kind of referring to. And go down just a little bit down. Keep scrolling down. Right, keep going down.
All right.
Up there, right up there. Scroll up.
Above.
Yeah, right there.
All right.
Yes. So this is like the transition we're watching right now. So you can see on the left-hand side, the green boxes, that's kind of Web 2.0, where you have the Googles, where they're just collecting information from you. And on the right side is showing how this new Web 3.0 kind of interface works. And for this Web 3.0, you need kind of a layer on top of that. So you can see down below, if you guys ever heard of like the TCP IP, which is like the internet protocol, which is like how the entire internet communicates with each other.
Right.
And that protocol is like open, and it's like a standard that the entire internet uses, right? Now for this Web 3.0, you need a new layer on top of that provides value or makes things unique and valuable. And that's what Ethereum is trying to do. Or it's now this value where you can like say like, hey, I own this NFT, and I'm putting this unique hash code on it, and this shows that it's mine. And this is what Ethereum is trying to do. So it's pretty interesting that we're in this time and we're watching this transition happen right now.
So say the last part one more time. So the TCP IP, I've heard of that kind of. So, okay,
Yeah.
so that's how it all connects together. But you're saying to make it, and this is kind of interesting. I remember when I was in college, I remember reading articles about Web 2.0, like, and being like, oh, this is what this means, and this is all the new things that are going to be coming, that are like coming into play. I remember that, and so this is like, you're right. This is a really interesting time. So add that layer for me one more time. So for Web 3.0, how does that work, or how does it work to add value?
Yeah. So I guess the thing that made the internet explode, right, was that you had this standard code that made it transparent and open to everyone and standardize everything, right? Because like, for example, if you're China, right, you wouldn't want to build the internet on something that's like a closed system. You want to build it on something that's open and permissionless. So on top of that, and that's why the internet exploded, because everyone can use it, and everyone knew what this layer was and this code was. Versus Web 3.0 is now building on top of that. And so for Web 3.0, this is the layer now in which you can produce value on top of that. So, and then this layer is also decentralized and open. If you guys ever heard that term with Ethereum, right? It's supposed to be decentralized, right? Or any cryptocurrency is supposed to be decentralized. And this is what Ethereum is trying to do. They're trying to become the layer 3, which is Web 3.0. And now you can use Ethereum to make value now. Like, for example, like if you ever hear of like now like open decentralized games now, and now you can buy like certain items, right? And they're like technically NFTs, where like if you buy that item, it's unique to you. And as long as you have your private keys and you have that NFT tied to your item, you can show that proof is, hey, it's mine. I have this key that shows it's mine now. So it's no longer that you have like this central like gaming company or a server in which they collect all the information from everyone else. Now the power is distributed to the people, in which you can say, hey, I have these valuable items now and they're mine, and I could prove it to you. And so it's a really interesting shift that we're seeing that's happening right now.
Yeah.
So I was thinking of another question kind of based on that. It's a thought that I've had over the last couple of weeks, and I can kind of ask it, but then it doesn't really matter, because I'm gonna go back to an analogy that I feel like maybe I've had it with both of you guys, or I've talked, is that people don't necessarily need the recipe to the cookie. We just hand me the chocolate chip cookie, man. I know how to eat that sucker, man. If you hand me the cookie, I'm good to go. But a thought that I did have, and we don't have to go into this, but I was like, okay, if the internet is the internet, it's like connected network of computers or whatever. And I'm like, this Web 3.0 is like, oh, it's sharing it direct. I'm like, how is that? How is it different? Because like the internet is already like connected computers, right? And that kind of like kind of what the internet is. So I'm like, isn't this just more connected computers? But I guess there's some additional layer there, and I guess that's the blockchain
Yeah.
somehow.
And so Sean can probably explain this as well, but I think one of the ways that I try to help our students, understand that is like, say for example, Bitcoin. It's a decentral, the part of the value of the Bitcoin network and the way that the sort of currency, which is just really one part of the technology, is that it's a decentralized network. It's a decentralized accounting ledger. So in order for a transaction to go through, you no longer have to Sean was saying a minute ago, it's not centralized onto one bank's servers or one company, one corporation's servers. Every node or every computer essentially that's a part of that network that has a copy of the ledger has to agree on that transaction. And so it's decentralized in that sense. And so there are a lot of applications for that. There are a lot of implications for that as well in terms of um, you know trustless. You hear buzzwords like, trustless and decentralized and things like that. So it adds a whole other level of, functionality to the web. And basically, like Sean was saying, value transfer, being able to transfer value directly from peer to peer rather than having to use a third party like a bank or a settlement house or something like that.
So yeah, that's good. And I think, and that's kind of like me. I'm literally soaking up y'all's expertise and other people's expertise, and I'm in this mode of asking just tons of questions and trying to kind of figure some stuff out. At the same time, not having to get too caught up in the ingredients.
Right.
Happy to just grab the cookie and take a bite. And I think that's definitely difference in personalities of people that are into it now.
Mm.
Some people like have to have all the answers before they'll take action. I definitely don't have to have all the answers, but I do like enough knowledge just to be like, yep, this is good. This makes sense. And I already have that in the digital currency space. Like all that makes sense to me. Like, currencies that know no borders, currencies that can't completely be, manipulated, that are checks and balances with this decentralized network. Like all these make total sense to me, and I think probably lots of people if you have that conversation.
Yeah,
With
I
us.
think a great place that I try to get a lot of my students that, especially, I'm coming at it from an investment standpoint, from a monetary standpoint, from a risk mitigation standpoint, from, having assets outside of the fiat currency system. I think a great place to start is the Satoshi white paper, which is free. Satoshi Nakamoto is the pseudonym for whoever invented Bitcoin. So that's a great free white paper that you can just Google it and go download it. And it gives you a really good outline of the idea behind why it was created, and the problem that it was sort of created to solve in terms of the monetary sense. But I would say, for most of my students, yeah, I try to get them to a place where they understand the concepts, they understand the blockchain, they understand the value transfer, and then the next step is to have them go set up an account on an exchange. Like Coinbase is probably the easiest one. It's not my favorite one, but it's probably the easiest one to trade fiat currency for cryptocurrencies and just do a small transaction, like a $10 transaction, because that's going to walk you through how to set up, an account. You got to go through all the know your customer and anti-money laundering stuff to set up an account. Then you have to link your bank account, do a transaction. Then once it settles, then you're able to see like, okay, well, this is how now I have such and such Bitcoin or Ethereum or whatever, and I can go buy something or I can trade it for something else. And so they start to kind of dip their toes into it. I think that to really, be able to get to a point, again, from an investing standpoint, to get to a point where you're willing to put a significant portion of your assets in it and you're not a total speculator, you probably need about 100 hours of studying the space. I think another great resource outside of the Satoshi white paper is Andreas Antonopoulos wrote a book called The Internet of Money. He's written a couple of books, but he's a great sort of spokesperson for the industry in a sense, and a great educator in the space. So that's another great resource for people that are just trying to wrap their minds around, like, how does this actually work? Digital currency, it sounds, like you said, it's crypto. It sounds like a scam. It sounds really weird. Do I have to be like a tech nerd to understand this? And as you can see from this conversation, there are three of us that are coming at it from three very different types of point of view. So I think that those are two really great resources to sort of start with.
I have to show you guys this. So Thanks for those resources. I wrote them down. So I found this photo. This is Anne Boleyn. This is so Henry VIII's second wife. And so I was like, maybe she's Satoshi Nakamoto, man. I don't know, man. There's some crazy stuff, man. Do you see that necklace? Do you see that
Yeah,
Bitcoin symbol?
I do. That's craziness.
I don't know.
Man,
I'm like, maybe she's a part of the mystery.
That's
goes deep.
that seems legit, man.
Right. So I've heard the white paper. I've heard of it multiple times, never read it. On that same podcast I was just mentioning with Brian Armstrong, they were like, yeah, it's pretty deep. I feel like I feel like I would scare myself if I read that, like try to get too into the weeds or too technical. Thoughts on that?
I think, I think it's one of those things that you can just kind of take it in small bites. You don't have to read the whole paper. I think it kind of goes in layers. It starts off at more of a broad philosophical level, and then it goes down into more of the technical aspects of it. So I think you should just sort of take it as far as you can. The other thing is there are tons of content creators that have done, that have read it, in content and sort of done an analysis of it as well. So you may find one of your favorite content creators that has done something like that to help break it down into more bite-sized, manageable, conceptual pieces that you can kind of digest.
Yeah. Yeah, no, that's a great point. And so, hey, so Brad, early on, I think maybe my second question I was asking kind of real weird in general. I think where I was going with that is like, is there a percentage of people's, assets from fiat currency to these, let me call it
Mm,
non-traditional assets or
yeah.
digital? Like, do you have any specifics that you kind of advise? I guess it's, you don't want to really advise people, but maybe you
Right, yeah.
do. I mean, I don't
I'm
know.
not a
Yeah.
financial advisor, so don't listen to anything I say because you'll lose all your money. No, what I recommend and what my wife and I did, and I've been in the space since probably 2013, 2014, sort of off and on. And so what we did is I tell people like, hey, if you're looking at it from an asset allocation standpoint, first of all, don't go all in. Don't do any more than 1% of your overall net worth.
Oh,
I would
interesting.
prefer that you do like $10 or $100 into a trading, a yeah, a trading account or an exchange account so that you can
Mhm.
again, like I was mentioning before, so you can start to see how the whole ecosystem works, how you get it, how you hold it, how you send it and receive it and all that stuff. And then from there, once you've gotten, about 3 to 6 months of that under your belt and you feel more comfortable, then you can start allocating more of your assets. But I think a lot of the wisdom that I've heard from some of the biggest asset managers in the world that I've, kind of followed, recommend no more than 1%. Now, I will say that, I've known about it since 2009, 2010. I kind of got into it in 2013, 2014, kind of got out of it and then got back into it again around 2014, 2015. And so I made a decision, for us to allocate about 10% of our overall net worth in it, pretty much at that time. Now, since that time, that's ballooned to well over 50% of our overall net worth. So I think that really speaks to, this inflation that we're headed toward. Now, there are plenty of people that will argue that it's in a bubble, and you're going to hear all kinds of those, the kind of analyses. I don't know, and nobody really knows at the end of the day.
Yeah.
There's a lot of speculation. There's a lot of hype. There's a lot of nonsense. There are a lot of scams, and so that's why I think that it takes a really slow, measured approach of really kind of laying a foundation. I think this resource that Sean's recommending is great. It looks like a really great conceptual resource as well, and really just slowly build your head knowledge as well as your experience in owning some and moving some around and that kind of stuff. And then you just wash, rinse, repeat until you have much more of a comfort level. The other thing that is really, really important to mention is that from a monetary standpoint, it's incredibly volatile. It's the most volatile asset, on planet Earth, so it could go up 30% in one day and down 30% in the same day. So you have to really be in the space. Now I've been in the space for a long time, so I expect that. I'm not surprised by it anymore. I'm not a speculator. I'm a long-term value investor. So I'm not really looking at the dailies necessarily. Although lately it's been kind of fun. Yeah. So that's kind of, I really advocate for a measured educational approach, maybe getting in community of people that are trying to do the same thing so you can kind of share and compare notes and things like that. So that's kind of what I recommend.
So when you talk like up there, or when you talk about completely volatile, you kind of talking about the cryptocurrency space as a kind of as a whole. Is that kind of what you
I'm talking about the pricing. The
the
pricing is very volatile, so
got it.
you'll see Bitcoin go up $10,000 in one day
Right.
and $15,000 later on in that day or the next day. And it's just, there are a lot of huge investors moving crypto around, in that space to kind of try to manipulate the markets right
Yeah.
now.
Yeah.
So there's a lot of that going on. But I will say, in addition to all of that, over the past couple of years, especially, we've seen very, very conservative financial institutions like insurance companies and sovereign wealth funds and, major commercial banks allocate some of their assets into Bitcoin. So that telegraphs to us that this, like Sean was saying, the way that I would say what Sean was saying is that it's a real time monetary paradigm shift. Like, this is happening. I really, recommend however you think about it or feel about it, you really owe it to yourself to start educating yourself about it, because at some point, this is where we're all going to be.
Yeah. Real entities, large entities are buying in to
Mhm.
the concept. You have a
Yep.
new ETF that just recently launched, right, officially for Bitcoin. So now I call it old money. Now you have old money that can buy in
Right.
a way that they're comfortable with. Just click, calling their
Right.
stockbroker or clicking a button and buying through their traditional investment account. Now they can invest in the future value of Bitcoin by doing
Yeah.
that, which is,
Yeah.
yeah, I'm totally with you. All right, does it and Sean, you can add any thoughts if you have any right now, but I have another question. Sean, any
Yeah.
thoughts? Okay.
Yeah.
Yep. Does it the fact that there's 1,000 plus currencies right now, and it's very easy for people to, I guess, create them, right? Because we have all these kind of meme coins, and that yeah, it's kind of, on one hand, I guess you could say it's fun. On the other hand, maybe it's hurting some of the brand awareness, maybe of cryptocurrency, because people are like, what, like, why are these dog coins? This doesn't mean anything. It's just fun. It's fake, whatever. Um, what are y'all's thoughts on there being thousands of currencies? Like, does it bum you out? Do you wish we could just go ahead and narrow the field to, hey, let's just scratch everything, and hey, um what's the best? Like, could we just get down to those, or is it an exciting time, and maybe just the cream will rise to the top? And like, how many do y'all think we'll end up having, like, in a world? Like, how many of these currencies do y'all think we'll end up having? Like, do you guys have any of these questions or thoughts?
I have
Yeah.
thoughts, but I don't want to monopolize the conversation. I want to hear what Sean says, and then I'll add
Sean,
mine if there's margin.
what do you think, Sean?
Oh, yeah. All these blockchains, they're all trying to solve pretty much the three main like trilemma problems of blockchains, which is decentralization, scalability, and security. And then that's kind of like the base. That's what most of these like layer one cryptos are all trying to solve. So that's why there's so many of them. And then on top of that, you do have your like scam coins too on top of that, because there's a bunch of money coming to space, right?
Mhm.
Yeah.
And all these scammers are jumping on this train where everyone hears about crypto and they want to make money, or they hear about their friends making life-changing money.
Yep.
So these people take advantage of that, right? They make up this coin, they get a celebrity to talk about it and promote it, and then they basically steal everyone's money when they make these coins. So there's that kind of sector, that like the scam coins, but the main coins, they're all trying to solve that trilemma, because the problem with these cryptocurrencies is that if you try to increase like the speed of something, you might make it less decentralized. Because yeah, so I could go deep in that, but that's why there's so many of these cryptocurrencies. They're all trying to solve this problem, that's in the crypto space right now.
So, like, trying to figure out maybe the right mix of like
Yeah.
speed with security and
Hmm.
and that kind of stuff. That
Yeah.
makes sense. Okay, so Brad, I'm gonna let you jump in, but that makes me think of another question. So every cryptocurrency is built on a blockchain, but not necessarily their own blockchain. Like, a lot of them are built on Ethereum, right? Any idea like how many different blockchains there are out there? Anybody know? That just made me. I had that question while you were talking.
Yeah, I'm not sure exactly what the
I don't either.
number of, how many of cryptocurrencies are there, but I mean, to me, I don't know if that's really, how much information I could get from that.
Yeah.
But just going back to these blockchains called the layer twos that are building on top of the blockchains, they're trying to solve that problem of these layer ones, right? So like Ethereum, right? We hear about like these high gas fees with Ethereum. These layer two coins are building on top of Ethereum to help solve that problem temporarily right now. Or there could be a utility case where these different coins are trying to solve a very specific problem and use Ethereum as just like a base layer, or like almost like a final transaction layer. So the best analogy I can talk about is like, for example, with Bitcoin and the whole Taproot upgrade network thing. Like it's, if you go to a bar, right, you can have like, you can make up a tab like, hey, bartender, let's just start a tab. I'm going to keep this tab open. I'm going to order drinks. And at the end of the night, I'm going to close the tab. So if you buy 10 drinks, you can have all those transactions done at the bar. But when you're done at the end of the night, you just close out the tab, and only two transactions are done on Bitcoin on the layer one, right? So that's kind of the best analogy I could use.
That's a great that's a really good analogy. I remember you mentioning that before, and I'm glad you mentioned that one again, because like when you said that to me, I was like, makes complete sense. Why would I go up and order something every time when I can just do one transaction at the end of the day or whatever? Like great analogy. And that is that what just went into effect for Bitcoin, the Taproot?
Yeah.
Yeah, that was like real recent, right? Like within the last
Mm-hmm.
couple of weeks or something, or within the last
Yeah.
week, maybe. Okay.
Mm-hmm.
All right, Brad, did you have some thoughts on that?
No, just
You're holding?
going back to your question about, how many different coins or
Yeah.
blockchains there are, and the value of those. I kind of see that as, technology companies, and to piggyback on what Sean was saying, they're all trying to find or solve for some unique problem. I mean, ultimately, I think the free market will kind of shake a lot of those out. A lot of them have, I've been in the space for almost 10 years now, and I've seen so many coins, come and go.
Oh
And
yeah.
so what
There's
I,
oh, sorry to interrupt, but
no, go ahead.
real quick, there's if you go on Coin Market Cap, they have like a historical snapshot of, you can see like what the top 10 coins were back in
Yeah.
like 2013.
Yeah.
And it's a very interesting list because you don't see these coins, and
The crypto
you have
graveyard.
like, yeah, you have like Pure Coin, Name Coin,
Yep.
Barbecue Coin.
Yeah. Yeah.
It's pretty funny.
Yeah, so I think that many are going to come and go, and I think that I think the space will continue to proliferate. I think that there will be, there will be always that top 10 that are most used and have the highest market capitalization. But you can kind of think of it as, how many fiat currencies are there? Probably over 190, and then you see, other layers of currency in terms of rewards points, and for different companies and airlines and things like that. So I think that there are just so many different use cases, almost infinitesimal. But I think that probably what will happen is that people will really look at value in terms of something like Bitcoin and Ethereum and maybe XRP and some of the coins that are sort of in the top 10 in terms of market cap. But yeah, many are going to come and go, just as their usefulness and the determination, that they're a scam, or that the creators have front loaded a ton of coins for their own personal wealth creation, essentially. And so there's a lot of shenanigans that go on in the space. So that's why I think we're all advocating for just a very measured education approach to getting into the space. Make sure you understand what you're doing before you pull the trigger on putting a bunch of your assets in it.
Yeah. No, that's a good point. I was gonna say, yeah, that's kind of like, it's kind of scary but exciting all at the same time, right? Because it means a lot of opportunity, but yeah, it's because of less regulation, a little more wild west. Is kind of but it's but dang, it sure is interesting.
Yeah, and I think it really isn't. It causes us to have more, because you hear this term thrown around, like, with Bitcoin or with cryptos, you become your own bank. And so what we're so used to in our current system is turning over our security and the security of the transactions and all, and our passwords and all that stuff, kind of over to a third party. Whereas, with Bitcoin, there's a saying, not your keys, not your Bitcoin. So you have to make sure that you have your private keys and you guard your private keys. Your private keys are basically, sort of your receipt for the transaction of of your ownership of that particular amount of crypto. And so it's a very 100% personal responsibility. And part of the reason that these ETFs and these like grayscale Bitcoin trusts are emerging is because that there are so many people that are not interested in owning the coins themselves and custodying the coins themselves. They would rather do that through a third party intermediary, which at the end of the day, they don't actually hold their keys. So it's really not their Bitcoin. They're just getting exposure to the asset. So I think that's a really key differentiation as well. Like if you really want to own the asset, you really have to do those transactions and hold those private keys yourselves rather than trusting, we know how that goes in the banking system, a third party to do that for you.
Gotcha. So I guess I'm picking up from you. You're definitely a proponent of doing that yourself rather
Absolutely.
than
Well,
using the
I
custodian or
think,
whatever.
yeah, I think that it really depends on your comfort level. And I have exposure in a lot of different areas.
Got it.
I own crypto. And then in my, my retirement accounts, my Roth IRA, my IRA rollover, our brokerage account, we hold, Grayscale Bitcoin Trust. We hold some shares of that as well. So we've got a pretty well-rounded, exposure to it because I can't take funds out of those without penalties and taxes to buy, the real asset, at this point, anyway.
Gotcha.
So yeah.
Gotcha.
So
That
there's a measured approach to all of that, I think.
that makes sense. And I think the three of us would probably for sure agree on just this general statement that just things have value because people say they do. And that's kind of a simple definition, but that's almost it. Like, because people ask the question, why in the world? Why in the world should a crypto like what? Why should Bitcoin? Yeah, it's 21 million. I can't touch it, can't feel it. No one's telling me it's like why? Why does it have value? Because I don't know. Like we're all deciding it does, and clearly it's moving in that direction. And I think when like you really think about like specifically gold, like for example, at some point someone said this is valuable, right? Because I guess if you compare it with other metals, I mean there's a lot of use cases of other precious metals that are actually, I would say, are probably more valuable than gold for what they can do. Some of very very rare and precious metals, but yet gold is potentially more valuable. Is that just because at some point, like, do you guys is that because at some point we said so and now it is?
Well, it's partially because it's rare. Part of the reason that we're seeing the inflation that we're seeing in all of our, the whole global economy is because, governments are printing these fiat currencies into ad infinitum. And so the more you run the printing press, the value of each one of the, so it becomes less rare in that sense. And so part of the value of gold and silver and palladium and some of the precious metals is the rare, how rare they are. It takes a lot of energy to extract them out of the ground. It takes a lot of energy to refine them. It takes a lot of energy to turn them into a bar or a coin. And so in that sense, they're very rare and it's a very expensive process to do that. So it's very similar to Bitcoin and cryptocurrencies. To mine those coins, there are complex mathematical problems that are being solved in the transaction settlements, and it really goes to, and I'm using Investopedia's like the definition of money. It has to be fungible, durable, portable, recognizable, and stable. And so you have to look at when you're talking about money and the aspects of money, you have to look at all of those. And so just because, yes, there is an element of us all agreeing that something has value, but I think that we're also in a system right now where governments are saying that the dollar is the world reserve currency. But I think that what we're going to see over the course of the next decade is that's going to be supplanted by perhaps Bitcoin, Ethereum, some of the main cryptocurrencies, or probably maybe some other entity. So I think that there's truth in what you're saying, but I think that you kind of have to dig a couple of layers.
I like how
And why an asset or a network like Bitcoin or Ethereum has value.
I like how you added there was something you said in there. You said or some other entity, like potentially that doesn't even exist in today's time. I mean,
Yeah.
that's a real potential, right?
Yeah, we don't know. Yeah.
Yeah.
And I love that part. Like personally, I love that part of it. I think that like some people are just terrified of that or it scares them or whatever. But I'm like, I love not knowing what potentially is around the corner, you know, in a 5-year period or whatever. I think it's awesome.
I guess something I would add on to Brad's discussion about it's kind of exactly what you said, Brooks, about like how we give we give value to things, and that's how we say it's valuable, right? Like gold, like we say it's valuable because it's rare, and I agree. But like in the end, just because something is rare doesn't necessarily mean it's valuable, right? Like I can tear a piece of paper like in 3 pieces and say like, hey, these are the only piece of paper in the world that can be teared in these 3 unique pieces, right? um, I guess if you want to pull up that article again,
Oh yeah.
other things that make something value, right? Is if you could make money with it, right? Like, hey, if
Yep.
I have this piece of land, I can rent it out and give it to someone, and they will pay me money. If you scroll back down to the end where that
Back to that.
triangle chart was,
Yeah. I'm
so
seeing
that's kind of the thing
that.
with crypto too, so that you can also lend it out. So if you go, yeah, this triangle, so you can see here, this is a model of the U.S. economy, and it talks about why the U.S. economy is valuable, right, and how we kind of promote this value right here. So you can see we have the store of value, which is the U.S. dollar, right? I mean, if you want to call it store of value right now at the point,
Yeah.
I mean, it still is. We still use U.S. dollar, and it's
Sure.
not going anywhere. Even if people are saying the U.S. dollar is going to tank, it's not going to go anywhere for the time being. A capital asset, U.S. Treasury bills, right? We can lend out these. People will buy our Treasury bills or bonds, right? And then we will repay that bond back. But the value of the U.S. economy, because we're the U.S. and we can basically print money and pay you back in this bond, right? And a consumable asset is like the IRS. The IRS generates money for the U.S. economy, right? They collect taxes and all this stuff and provide more money to the system. If you scroll down, so this is an example of how cryptocurrency is like an economy, a mini economy. And because here, like Ethereum, you could do different things with Ethereum that make it more valuable. So, for example, like you can stake Ethereum and help the network run. So by owning Ethereum, you help the network run and you make money off that. So that's one form of which makes like a currency or a store of value valuable. So yeah, it's rarity, but it's also like, hey, can I make money with my cryptocurrency or my asset? And this is another thing that makes things valuable.
Love it.
It's
So,
just crazy, man. It's crazy how it feels like changing.
it's so good. Does any of it feel? Does it make money? Like this, the whole concept, digital currency. Does it make money in general feel more like less tangible, more of a concept, more it feels more and more like monopoly money to me, I guess, is the simple way. I just
Hmm.
want to put that out there. I don't know why that is, but that's starting to happen more and more to me as this advances. It just becomes feeling more and more like that, and I don't know if that's normal. I don't know if I'm going through some kind of crisis on my own, or if that's just like a natural
Hmm.
evolution of what's happening. But I mean,
I think, for me, it actually feels like money is becoming more valuable and more tangible in a
oh, it's
sense,
cool.
because the way that I've seen, especially, since my sort of second great awakening in the 2002, 2007, 2008 crash, and just the understanding of the fractional reserve banking system and the Federal Reserve and monetary policy and how they print, and and just how our currencies are constantly debased and inflationary. It really, I started getting into precious metals investment, pretty much very soon after, because I was like, I need some insurance against this,
Gotcha.
And so what, especially I think when Bitcoin came onto the scene, and I started to really understand like what it was and the problem that it solved, I was like, okay, great. So this is actually a hard asset. A lot of people call it digital gold. And so I very much see it that way. So I'm not at all, the thing that I'm super encouraged about in all this is the decentralization part of it, because the centralization allows the money masters to, control, they have, they're the ones that have first access to the money printing, and they typically buy up all the assets. And then as those new printed dollars trickle through the economy, they can become less and less valuable by the time they reach, Joey Bag of Donuts, like us, or like me anyway. I'm very encouraged, and I have been encouraged about it for about a decade. And now I think, especially because of all this inflation that we're seeing, I think that people are really starting to wake up to, just that inflationary juggernaut of what these central banks are doing all over the world in debasing their currencies.
It's so interesting. It just dawned on me that like you guys are partially responsible for helping like this movement. Like everyone that's out there creating content or educating people or talking to people is partially responsible for helping like this idea move forward. And it's almost like it's peer-to-peer education. I think it's really cool. All right. So
Yeah.
like I know that you guys, Sean, I know you have to go shortly. So let me ask you guys this. If there were 3 to 5 cryptocurrencies that are just the most interesting to you. I know this list may change over time. So like, and it may not, but let's say in real time. So today, as of recording, it's November 24th, 2021. If somebody's watching this in the future, what are like 3 to 5 cryptocurrencies that are just on y'all's list that are like intriguing to y'all? Maybe you're invested in, whatever. It's moving up the ranks. It could be whatever, and you can tell us what they are and why. Sean, yeah, Sean, you go first if you want to, because I know.
Yeah. I mean,
I'm gonna write these down.
You want to speculate, or do you want to be?
So you name and say why, and maybe you want to mix the list up, right? Maybe there's 1 or 2 because you're like, hey, like this is the future. Maybe there's a few because you're like, there's a chance, but this is pure speculation. But I think it's going. If you wanna purely gamble on a crypto, your reasons, your list, man.
Okay. Well, all right. So my list is, I mean, for the best risk to adjusted returns, it's Bitcoin. Bitcoin, it has the highest market cap. And if I look out into 10 years, that's a good question to ask yourself. Do you think this cryptocurrency is going to be there? And my answer is, I still believe Bitcoin is still going to be here within 10 years. They may not be the number one coin in 10 years, but it'll still be there in 10 years. The second to that is Ethereum. So I believe Ethereum, you're going to get higher returns on that, but definitely is a little bit more riskier. It has more volatility than Bitcoin, but I see Ethereum being out there within 10 years. And the reasons why is because it has, it's one of the highest, well, it's the highest cryptocurrency with the most value that's on the chain right now. And Ethereum's market is endless, right? It's trying to be the internet computer or the value layer of the internet. So it's trying to solve a lot of things compared to Bitcoin, which Bitcoin has one main purpose, which is basically a store of value at this point. I don't think it's going to become a currency. But Ethereum is trying to become, it's trying to solve a lot of problems out there. So that means a lot more money can actually come into Ethereum. Now, after that, besides Bitcoin and Ethereum, I think Bitcoin and Ethereum should be a major part of your portfolio. Then there's other cryptocurrencies out there. You have like Cardano, you have Polkadot, you have Solana. You hear about all these names, these layer ones, and they're all trying to kill Ethereum. But if you just look at pure market cap and how the whole cryptocurrency market is moving, everything's coming to Ethereum. And that may anger a lot of people. And I like Solana, right? There's a lot of hype with Solana right now. But the thing with Solana, it's still centralized. And that's the thing. I don't think the internet can be built on a centralized platform, right, such as Solana. So that's what makes me really bullish about Ethereum. But that doesn't mean I put all my eggs into Ethereum. I still have positions in all these other cryptocurrencies I mentioned, like Cardano and Solana and Polkadot too. So those are the major ones that I invest in. If you want to go a little bit more riskier, you can look at like Matic. Matic is a layer 2 cryptocurrency that builds on top of Ethereum, and they're trying to solve a lot of problems too that Ethereum has right now. But I still think Ethereum is like kind of in its awkward teenage years where it's trying to like figure out a lot of things, and they're trying to hammer out these gas fees. But after that, I feel like the potential is there, and also it saves a lot, right? If you hear about all these high gas fees for Ethereum, but yet people are still building things on Ethereum, people are still using Ethereum besides the gas fees, that saves a lot, and it shows how much people actually value decentralization.
Mm-hmm.
Interesting. Yeah, good points. Great points. Brad, what's on your list, man?
Yeah, I would be almost in 100% agreement with Sean. Bitcoin and Ethereum are, probably 80% of, my overall holdings in the whole space. And then I would say after that, probably XRP. I'm intrigued by XRP because of sort of their relationship with the current banking system. And I think that there is always, possibility that the value of that could potentially explode. There's a lot of drama with their lawsuit with the SEC right now, and kind of working through some of those things. But that's not a significant. I'm already went from 10% of my portfolio to well over 50% of the value of my portfolio. So I'm just looking for incremental gains at this point. I'm not trying to bet the farm on anything. Outside of that, yeah, I'm interested in Cardano. Also as a, kind of a not neck and neck value of Ethereum. I mean, Ethereum is the most used blockchain, in existence right now. There is so much stuff, like Sean was saying, there's so much being built on top of it that it's a very, very utilized network. And I don't see that going away, changing at any time soon. And I think from a pure speculative standpoint, I do hold a little bit of, Shiba Inu, just a little bit of fun money on that one. And I got into that one a little bit early as well.
Nice.
But yeah, those are the sort of, my main holdings. Again, I think the main value is Bitcoin and Ethereum. I agree with Sean on that. And then, but again, I'm not really a speculator. I mean, obviously I've got a little bit of maybe 1% of my crypto portfolio is somewhat speculative. But I'm more of a long-term, value investor. And the returns that I've seen from, particular, Bitcoin and Ethereum, but also XRP have just been, nothing like I've ever seen in my lifetime. So, yeah, that's kind of where I am. And I'm interested. It's been really cool connecting with you guys, connecting with Sean, because Sean is much more of a technical analyst. And so that's part of my toolbox that I'm interested in sort of building at this point, to be able to analyze things as I kind of went dormant for a few years in this space. And now I'm kind of plugging back into it. I recently got into staking. Sean's kind of helping me understand the NFT space a little bit more. So there's a whole other couple of layers of things that have been added since I was really active in the space a few years ago.
Got it. Okay. No, super cool feedback from you guys. Kind of related to that. So huge growth trajectories over the last number of years, right? But so we're right here. I don't know where the adoption level is or whatever, but I guess I have to believe that potentially there's plenty of room to grow as well, like more value, I think, to grow in these cryptos, because as there's more adoption, unless we're just way overpriced right now as it is. I mean, for people that are like hesitant to get in because they're like, well, dude, Bitcoin's whatever price it is, 60,000 or whatever it is. What are like, do y'all think, hey, it could definitely be significantly higher over time?
Oh, absolutely. I think we're still very, very early. I mean, the adoption of the overall population is still minuscule.
Yeah.
And I think the other factor in that is we are just beginning to see inflation like this. We haven't seen anything yet. This is not transitory. The Fed is wrong. They're lying. It's not transitory. Like we're in big trouble.
Interesting.
Yeah.
Something to add on to that. I definitely, Bitcoin and cryptocurrencies are trending up with time. But if you look at technical charts of like cryptocurrencies in general, you can see that there's periods of boom and bust, right?
Yep.
Like we all have heard about like the 2017-18 crash right now. Not now, but we heard about that. But now, I still believe that we're going to have these boom and bust cycles for maybe one or two more times. You know, it's hard to say,
Yeah.
trying to look out in the future. But we are definitely, in my opinion, in kind of the middle to like 70% way through this current cycle, this current boom and bust, right? Where we're going to have, like, you know, once Bitcoin hits 100,000, everyone's going to be talking about it, right? Like your
Yeah.
mom's going to ask you like, hey, how do I buy this Bitcoin stuff at 100,000, right? And then,
Yeah.
you know, once that happens, then a lot of people are going to start looking into it and start buying it up, right? So, you know, definitely expect once Bitcoin hits around 100,000, we might go higher. Well, we might not hit 100,000, but that's kind of my price targets. But once that happens, you know, the mania behind Bitcoin is going to go through the roof, and people are going to start buying it. It's going to push up the price, and then that's when I predict that, you know, there's going to be a sell-off, right? And Bitcoin and cryptocurrencies might sell off, you know, 50 to 75%. But just because that happens, if you take a look at the macro scale and the trends, right, you can see that we're just in a constant uptrend, you know, and you have these periods of boom and bust. But if you look at basically the trend line of the entire crypto space is going up. So, you know, that's why it's like, if you're a long-term investor, it's definitely, in my opinion, a better way to invest,
Yeah.
and it's a safer way to invest. But you have to understand where you're at in these market cycles too, and that's important for timing too. But there's another part about timing too, but, you know, I won't go into that. But it's better just to, you know, if your timeline's 10 years, it's an okay time to buy Bitcoin right now, or cryptocurrency in general. So it just depends on your timeline and your what your goals are.
Yeah. Are you an investor, or are you a trader,
Yeah,
speculator, you know,
yeah.
or where in that continuum do you fall? Or
Yeah.
what?
Good point.
Yeah.
Good point. One more final question. It's kind of a rookie question, but it's I'm like, wait a minute. Okay, so you have Ethereum, the blockchain. ETH is the actual currency, but we call it Ethereum, I guess. But ETH. If you invest in that cryptocurrency, and you guys correct me if what I'm saying is incorrect, but if you invest in that cryptocurrency, are you by default investing in that blockchain because of everyone else that's using that blockchain for different things like NFTs and whatnot? Is that an accurate statement? What I'm saying?
Yeah, I would say so. Yeah. Yeah, I would say that
Okay.
there, yeah, I mean, essentially the value of the asset is going to rise as the value of the network and the usage of the network increases. So I would say yes. Sean, would you agree with that?
Yeah, yeah. I mean, yeah. There's some. Yeah, I agree with what you're saying.
Yeah.
Okay. I don't know. I mean, I'm kind of tying these things together because I'm like, well, if I mean, let's say other cryptocurrencies are become more popular or whatever than Ethereum, but what we're saying is that, well, hey man, that the blockchain's so utilized in building all these, DeFi apps and NFT, all that's built on that blockchain, like by default, or is it kind of safe? The cryptocurrency somewhat safe because of that, even if it's not used in
Mm,
other ways. You know what I mean? That I
mm.
guess that's another way of me asking that question.
I, I guess what I think you're trying to get to is, so are you saying, like, if you buy a piece of cryptocurrency, or if you buy cryptocurrency a piece, that means you're kind of like involved in like the cryptocurrency? Is that what you're asking?
Specifically Ethereum. Yeah.
Yeah. Yeah. I
Because
mean,
yeah.
yeah, you could think of it as like you're buying ownership, right, into the actual uh, cryptocurrency, like Ethereum, right?
Yeah.
Like what Brad said, like, you're not your keys, not your coin, right? Like, if you have that coin, you technically have a piece of that asset. Now, that piece of like Ethereum, it can be used in different ways in Ethereum, right? Like you can use that to stake, right? You can help run the network by staking your Ethereum. It's a store of value, because just like the rarity of it, right? Um, or there's another part of it where these applications are using Ethereum, and their people are using that application and paying fees, right? So if you
Yeah.
buy like Ethereum, you
Yeah.
have to pay a gas fee. Now that gas fee actually goes to the network.
Yeah.
So that's another thing where you can actually generate money, or your Ethereum is generating value by holding it.
I think you are answering my question or what I'm thinking, because you mentioned Cardano, Solana, Polkadot trying to, in essence, let's say do better than Ethereum. But what we said was, well, hey, Ethereum, the network's so widely used for other things that is that kind of a build safe a little bit in that cryptocurrency because it's becoming so widely used. And I think what you were just saying kind of answers that as a yes, I think.
Yeah. And you can see, yeah. Are you saying that, if you can see how many people are using it or how much money is locked into a cryptocurrency, that makes it more valuable? Is that what you're kind of getting towards?
No, what I'm saying, so Cardano, Solana, Polkadot, like you said they're trying to kind of outdo the Ethereum crypto, right? Like ETH, like trying to create a better one. Is that correct?
Yeah, they're trying to solve that trilemma problem. They're all trying to solve that.
I guess what I'm saying is, let's say they do it and they become, wow, like they solve that problem and maybe it's more popular than Ethereum. I guess what I'm saying is there maybe some protection in Ethereum because of the wide usage of the blockchain for other applications? That's kind of what that's kind of what I'm getting at, because NFTs are currently most popular on Ethereum. DeFi apps built on the Ethereum blockchain. Does the blockchain, you know what I mean? If you invest in the ETH cryptocurrency, are you investing in the blockchain itself? And I don't know the answer to that. But that's kind of my question.
Yeah, you are.
Yeah.
Okay. So maybe somewhat of a safer cryptocurrency because of the adoption of all the other things that are
exactly.
All right.
Yeah.
I totally answers my question. Sorry I made that one super difficult. All right, we're gonna wrap this one up. I know you guys have to roll. This has been a mind-blowing, amazing conversation. I've loved it. But if y'all have any final thoughts, throw them out right now, and then we'll end it.
I would say just, get started with the education process. Go read the Satoshi white paper. Go check out some of Andreas Antonopoulos' stuff. Check out this Ether website that Sean is recommending, and start to try to conceptualize. And then the next best thing you can do is take action. Go set up an exchange account and just dip your toes into the space so that you understand how things work. And don't be tempted to bet the farm on anything. You really need to have a measured approach into getting into this, and don't gamble, invest.
That's good. Sean, any final word?
No, I mean, I agree with everything with Brad saying. I guess what I would add is just, what helped me get invested in cryptocurrencies was, like when I first heard about it and learned about it, I was like, what is this like digital magic money? Like, how does this have any value at all? And I was a big like index investor, But what it really helped me was I understood it, like how Brad was saying. I researched, I read books about Bitcoin and cryptocurrencies in general. But really what pushed me over the boat was that I just said, hey, what happens if I just took 1% of my money and I said, I'm just going to try this out? If I lose 1%, big whoop, right?
Mm-hmm.
So that really helped me kind of think about things. Like, it was like, wow, like $1,000 is a lot, but in the grand scheme of things, $1,000 wasn't much. But so I didn't mind losing 1%. And that's what really pushed me over the boat and saying, like, okay, I'm just going to put $1,000 in Bitcoin and then kind of go from there and learn about it, and research it and understand it. Because once you have money in the game, right,
you will pay attention. Yes.
Yeah, you will pay attention to that. So that's what really helped me get into cryptocurrencies and understand it. So just, put a little money into it, and then that will push you to learn about it.
Skin in the game.
Great point. Skin in the game. Yeah. When you are personally invested, it definitely pushes you to push harder, learn deeper, and do all those things. So for sure, totally agree. All right, boys, I've enjoyed connecting with y'all. Stick around if you want to for just a second. I'll play some outro stuff, and then if you have some time, we'll stick around and chat.
Awesome.
Yeah.
All right. See you, boys.
Thanks.
Thanks, sir.
Hey guys, thanks for hanging out with us. We'd love for you to share it, maybe with a friend, review it, and don't hesitate to reach out and say hello. You can connect with us and see the resources that we talk about at destroytheboxwith.us. That's www.destroytheboxwith.us. See ya.